Hi, everybody, and welcome to a summary video of stock price action that occurred during the week of August 31st to September 4th. Obviously, the end of the week was very painful to watch and to endure. I certainly was not in position to have limited all of my exposure to 2 days of really rapid selling. I want to take you through some very quick things that should have been warning signs, and then I want to move you through a lot of charts. It's really kind of like an A through X. We'll do essentially like an Amazon through XLF fly through of a lot of charts. I want to talk about some possible paths forward and hopefully even give you some really good trading ideas for either trading rejections that could lead to further price declines, or hopefully, since my bias is bullish, I really don't like to be short, some possible breakout areas with high probability for you to be able to enter. So let's start with NDX. And what I have to point out here on NASDAQ is this candle right here. This is Wednesday's close and how far extended it is above its 8-day EMA, and the pattern that put in, we call that a hanging man candle, and that really should have been a clue that we're really just too far extended. On QQQ, of course, you're going to see the same thing since it's really like the NASDAQ 100. Selfishly, I was hoping for one more touch of what I've been charting as this active upper trend line that had been hit multiple times, going all the way back into the early part of May. It was greedy. I should have been able to reduce my exposure even more just because of the way that pattern put in the candle and how far we were overextended. And then, of course, we know the rest of the story. Thursday and Friday, we get a massive decline. Now, all hope is not lost here for the bulls. So I do want to take us through what I think is going to be a movement from what I would say are the most bearish stocks and indices up to the ones that I think maybe are the most hopeful. So that's got to take us to small caps first. So I said earlier in this week that small caps were going to be the key, that if small caps could not hold above their June high, you essentially have to look at this as a failed breakout. And on Friday, at the close, small caps made every effort to try to capture that June high, but just didn't quite do it. So I can't be convinced that Friday's bounce was enough to resolve itself bullishly on Tuesday and through the week. I've got to leave in the possibility that we do trade down here in small caps to the 200-day, a retesting bounce back up to that breakout, failed breakout area now that it looks like, and then a really painful continuation of the sell-off. Okay, now of course there is still a possibility that we do get resolution upwards, and one encouraging thing to me is I actually have not had to change this chart since the early part of June. Since this low was put in, I was charting it as an intermediate 1-2, minor 1-2 setup, and I have it in an extended 3 of 3. I have not had to adjust that. So the sell-off on Friday did not violate that count. So in that way, I am still hopeful that we do get some resolution, but what has to happen in small caps is it has to recapture that June high of 153.39, and then it has to get above its 8-day, 13-day, and 21 EMAs. And that means it's going to have to be moving decisively above 155 into the 156 area for me to even think about adding either IMW or IWM call options or TNA, or if you're just wanting to hold IWM long as a stock. Okay, let's now move into the S&P 500. So the S&P 500, I was optimistic here. It didn't put in that daily hanging man candle on Wednesday, and it even broke above what had been here, kind of an active trend line all the way back through the middle part of May. But of course, tech was overextended, and tech was the one that led to the nasty sell-offs on Thursday and Friday. A couple signs of good news. The 50-day SMA held, this lower rail held, and SPX on a closing basis did hold its 21-day EMA. So it could all just be part of a minor B bounce with a more painful downside correction to come. Of course, that would coincide with small caps collapsing. We just have to wait and see. You can obviously see that again, like small caps, I have not had to change this count since the early part of June. There's been no flip-flopping here on my bullish count. This sell-off on Friday, it did hold. It did hold some typical degree 4 sell-offs. And so that gives me hope that we could actually see a continued resolution of what I still have us in as a minor 3 of an intermediate 3 that would eventually have us getting to SPX 4000. The time estimate here is just approximate. That would most likely have to be well towards the end of 2020. So financials. Now, we're gradually getting better here. So financials give me even a little bit more hope because financials on Friday did close above their 8-day EMA. It held that lower rail. It had a nice bounce right off the 21-day. And if I think we're going to see a leading rotation that could pull us up, I think it could be here in financials. And also you'll see a few that I have on some transports and industrials. Otherwise, of course, if we're led down by small caps, then you've got a much more painful trade here. But it actually has held so far its breakout from early August. So maybe some optimism. This is the only thing that I did add at the close on Friday. I did add some FAS to try to play a potential leverage trade. I did not go heavy, but because of the position of that close, I was willing to go ahead and do it. With a stop here, I would put the stop on a closing basis at the 21-day EMA. So if there's bad news, bad selling on Tuesday, and it trades decisively below 25, then I'm going to force myself to stop that out. So an individual name in financials that I do like, I do see a consolidated basing breakout is in Goldman Sachs. So Goldman Sachs here on Thursday attempted a breakout, what was put back down beneath what I think is this triangular pattern here, and it broke out and held and closed above it on Friday. So we've got now the 50-day above the 200-day, the 8 EMA above the 21 EMA. We've got a close above what had been this upper resistance. And I did add Goldman September 18 call options with you can see some very bullish upside targets in mind. So as I'm saying, all is not lost here for the bull case, but we've got to see what Tuesday brings. So, what would get me out of that trade? Well, any close that goes back inside of this would be another failed breakout. So if there's a close back beneath, let's say about 208, that would be the 8-day EMA. I've got to scratch that out. In that case, you have to get out quickly because most likely it's going to lead to continued selling during the week. Okay, now shifting gears a little bit into some metals since it's just here on my screen. Metals, I think, are still trying to show whether or not they're going to break up or down. And I'm not smart enough to say, does this have to do with the US dollar or other fancy fundamentals? I don't know. All I'm charting is how I think GLD and GDX are still in this consolidated area. Now, I do have a bullish target upward, but it's got to break this downtrend line. So I'm not going to get active on the bull side until I see that happen about above 186. In fact, because that is leaning towards resolving itself downward, at least as of the close on Friday, where it did trade below its 8 and 21-day EMAs, I did put, excuse me, some GLD puts in as a hedge because I think if the general stock market does sell off, I think you are going to see a sell-off here now also in GLD and GDX. So in GDX, now we're going to see again, we're going to see a close here beneath both the 8-day and the 21-day EMAs. I did add GDX puts as well, thinking that we could get the resolution downward. And again, that's really as a hedge. I'm not willing to short the general stock market yet. But hedging here with some metals I thought was a reasonable play. Okay, so now let me move you through some individual names that I do think show a little bit of signs of life. So this is Boeing. So you could beat me up over this, but I want you to notice the bigger the base, the potentially bigger the breakout. So Boeing did hold on a closing basis what I think is an active lower support line. It did not get above either its 8 or 21-day EMAs, but I am optimistic for if we get some financials, some industrials here, some transports to lead us up, that Boeing could be one that's showing a nice upside target. So I did take a stab at some Boeing calls on Thursday. I held them into Friday, and we're going to see what's happening. So some more names that I'm optimistic on. How about Walmart? So in a more consumer defensive pattern, I've got Walmart in a very bullish uptrend. It just closed slightly beneath this very significant, I think, upper resistance. There was a little bit of a failed breakout, but it did close above its 8-day EMA. So I've got upside targets on Walmart. I was already long on Walmart from Thursday. I did not sell them on Friday. Excuse me, when I saw this closing hold. So signs of life, signs of some bullish hope. Now, how about ROKU? So ROKU is one from a longer term I'm even more bullish on. ROKU also did close above on its daily basis. Its 8-day and its 21-day, sorry, this is actually its weekly chart to show you some longer term movements upward. On its daily chart, ROKU did close above its 21-day EMA, and you can see I've got targets. So I'm not yet bullishly into a ROKU trade, either long stock or long call options. But if it gets above the 166 area here on the 8-day, I will take a chance on what I think is a very, very bullish possibility on ROKU. And I want to show you AMD. So AMD is one that I did have to significantly alter my Elliott wave counts here. But like SPX, it held what I think is a significant 38% fib retracement. And I've got bullish targets on AMD into the low 100s. So it did not hold its 21-day EMA. I did not enter the trade. But if I see AMD early in the week close back above here, this 86 area, I will play it long for a breakout up here into the 100s. Now, I want to show you what I look at on a short-term basis for trading breakouts. So Elliott wave and some classical TA patterns for me are all about increasing probability. And I do not front run trades. The Boeing one being the only example, but here I want to see a breakout. So that's what confirms. I call it a B tab, a breakout, test, and bounce. So if we do get AMD to break out from where I think we had a failed breakout, if it moves up, if it tests back, there's the breakout, test, and it bounces, that's what's going to get me into a leverage trade. And I like to trade weekly call options when I see that movement in my favor. So we're going to see what happens. Now, is it possible that we do get a cascading sell-off? Yeah, sure. There's a 50% target that's going to put us right down here, maybe into the $70 area. And of course, there's no way I'm going to touch it if that's the case. There is also, unfortunately, a bearish case that puts this intermediate high in place here. I'm not yet entertaining that on my charts, but we got to keep it in mind. Okay, so now let me take you through some of the big tech names here to finish. So let me get you into QQQ on the short term. So this move that finished Friday could have just been a dead cat bounce. It could have been a minor B wave, And if the market decides that it wants to sell off, we could see a nasty decline here in tech. Now, it also could be resolution up towards the end of this as a minor 3. And again, I have not had to change this count since the middle of May. No flip-flopping here on my primary. It did hold a deep wave 4, but it held above the wave 1, so there is hope that we get some resolution upwards. Okay, so of course you're going to want to see these names. So here we got Tesla. Could Tesla have put in a very significant top? The answer is yes. It certainly could have. This could have been a dead cat bounce. You know, the reason why I've already got this target on here is we know that Tesla was denied entry into the S&P. I think that is going to result in selling. But if 372 holds, I think this could be a 1-2-1-2 bullish setup in Tesla. So I'm going to be looking here to add Tesla as long as we see that this holds. Now, obviously, this could be a nasty, nasty sell-off in Tesla. If sentiment has completely switched directions, we're going to see it. But you know what? You've got an entry level here at 383, and you've got a stop level here, and that is a risk-reward trade I am willing to take. Okay, let's gradually move through the ones that I think are bearish through the ones I think are bullish. So Amazon. Amazon is another. I'm concerned about the chart because we got a wave 4 that traded into my wave 1. Now, that is not disallowed if we're in a terminal wave, and I have us in, excuse me, a minor 5 terminal wave. So I didn't have to change my chart, although I could have. It, at the close, it tested as I think a test of this that's now resistance. So is it a dead cat bounce? And we've got here an intermediate high in play that would put Amazon down well below 2,800. I don't know yet. I'm not yet willing to trade it, but what I want to show you is if it can recapture here roughly the 30, 20 to 30, 30 area. If we can get a break back in and then a test and a bounce, I would be willing to consider getting back into Amazon because I think the upside target is very high. Okay, Microsoft. Another one I had to significantly alter my count here on Microsoft. Both Amazon and Microsoft did not close on a closing basis above their 8 and 21 day EMA. So I am not into Microsoft. It did not recapture this channel. It did not recapture here where we had a breakout. So a running flat count. If I see Microsoft back in to this channel at the 217 area, I might actually take a leading stab, but you've got to be very, very wary of this minor B retrace. So if we're up early Tuesday, but we stall right in this area, then I would be tempted to actually short. And I think names like Microsoft could lead you to think here that like QQQ, this is a shortable bounce. If it stalls and gets rejected, then I might be looking at that as a tactical short. But again, you have to be very, very careful and you have to make sure that you're watching here. If it goes up and stalls and you choose to fade it, but it bounces as that testing and then bounces back up, then I think you've got to get out of those shorts. So we've got to see some confirming moves. Google, another one whose count that I didn't have to change, but on Google, I really should have known. I was long stock here in my long investing account on Google, and I should have seen on Wednesday the extension of tech. This would have been an awesome place for me to take either partial or full profits. We did get the nasty sell-off. So this is where my stop was at 1647. This is where I stopped out when it traded back into that area that's now looking like a failed breakout. For me to get back bullish into GOOG, it's got to get back in. But again, here's the danger area. Could this just be a bounce that then is then sellable to a very painful trade. I've got to see it getting above that breakout. It's got to be a B-tap, a breakout, a test, and a bounce. That's going to be in the 1650 area. So let's see what happens. I am not concerned at all about thinking I've got to front run this, because look how high this uptrend target is, above 1800. Look at all that room to run. Why buy it here under the probability of this potential dead cat bounce and massive sell-off? Don't do it. Only make sure that you're getting into the highest probability trades. Okay, now we're gradually getting a little more bullish. Apple did close above its 8 and 21 day EMAs. If I move you there on Apple, you're going to see that here. It did close above. That is not yet enough for me to get long Apple. Because again, you're going to see on Apple, we've got a potential for a Friday bounce or a Tuesday bounce that gets sold off hard. And if it does get sold off hard, I think it's targeting the 50-day simple moving average. There would be another probably retesting bounce before a very painful sell-off. Be very, very careful early in the week. Facebook being the tech name that I think could be one that is most bullish. On Facebook, it almost closed above its 8-day EMA. It tested it, was rejected, but it's solidly above this area of breakout up to the $300 area, and solidly above its 21-day EMA. So to get me into Facebook, again, what are we going to have to see here? We're going to have to see that B-tap, a break up, a test, and a bounce that's coming up here that would get me into a trade into the 327 to 330 area. So I hope you've seen some significant levels for you to keep in mind. Be on your toes on Tuesday. Obviously, if Tuesday is a gap down and go down, then you've got to be selling any of the longs that you're holding. You're absolutely going to be looking here on the daily chart. You're absolutely going to be looking to get out. If there's any S&P move beneath 3350, then this bounces in, and it's a much more painful trade. So you set your stops for anything long-term or actively traded at 3350 on the S&P. If it's waffling in there, look for support and look for those B tabs. And let's see what's going to happen. I am sitting on a large amount of cash that I'm ready to get back in to active trades. But I've got to see that confirming evidence. So have a great rest of the weekend. Follow me on Twitter, like the video on YouTube. And if you have any questions, I'm really active and helpful in answering those on either of those forums.